Good morning, everybody, and welcome to our first pick for 2014 here at Tradespoon. So let's jump right into the first pick. This is for January 2nd, 2014. Happy New Year, everybody. And we're looking at a long or bullish position in Trinity Industries, ticker symbol TRN. TRN. Looking at our risk-reward calculation here from Tradespoon, we see that we're on the low end of the curve at a 3. And our value momentum is at a 9, and it's right at that high end of the curve on that 1 to 10 scale. Let's actually scroll down and start looking at the price action here. The stock closed on Friday at 54, it feels like Friday, on the 31st at 54.52, which was on the upper end of the 52-week range, the high at 52.92, the low at 34.57. So it's definitely been in a nice bullish trend. We see that vol is at 30, and historically that's on the lower end. So that means that there's not a heightened expectation of potentially moving from its current trajectory, or in other words, its activity so far. The options that we're going to be looking at in our pick today are going to be expiring in February, folks. So we're going to get a little bit more time here, which is important to understand, since January expiration is coming upon us in the next 3 weeks. Let's scroll down and take a look at the picks. The stock trade is looking to purchase the stock at an entry price of around $54.52. So take a look at the opening if you want to wait. Otherwise, you can put a limit price in. Our target gain is going to be $54.52, our entry price, plus our target gain amount, which basically we would set a sell limit at around $60.50 since we're looking to liquidate on the upside on this long stock position. The stop loss is going to be $6.25 lower than our entry price, which roughly gives us a stop loss of around $48. That's where we would cut out of the position if it wasn't working for us, and that is our risk. And again, always use these question marks if you're wondering how do we come up with these particular targets. And now let's look at the options trade. We're going to look to buy the February $55 calls that are expiring in 2014. The entry price is going to be $2.25 per contract. So that's $225 per contract is the risk. Our target gain is going to be $225, our entry price, plus $225, our target gain calculation. So that's roughly going to get us out at around $4.50. So you'd set a sell limit at $4.50. You can simultaneously put in the stop loss. You can put it in right around, if you want to capture something. Otherwise, here what we're suggesting is that you just, the debit amount that you pay on entry is our risk. So that $225 would be the risk per contract for this trade. Now, since we do have a little bit of time and we are dealing with decaying assets, some of you might start looking at the option spread. And if you've never traded spreads, here's a great opportunity to place a virtual trade here on Tradespoon, and you can start following how this actual strategy works. And then you're building up not only the education on how the strategy works, but you're also going to build up risk and capital management techniques. And we're going to talk more about that through 2014. So we're going to look to buy the $55 calls for $225. We're going to reduce that cost basis of buying that by 65 cents. That means that our total entry price will be $1.60 for the spread. That means $160 per spread contract that we do. Now, what are you giving up? Like we said in the past, when you do a spread strategy, you're giving up something. In this case, we're giving up any upside past $60 in this case on this bullish position. Our target gain is going to be $220, so that would be the entry price of $1.60 plus the $220. So that gets us right around $3.80 as the limit price that we would want to put out there to sell to close this position between now and February expiration, just like what we've discussed with the other two strategies. Our risk, we're willing to risk all of the premium that we're paying for this particular spread, which is $1.60 or $160 per contract. Now, always take a look at the stock analysis and so forth so you can get a feel of what the actual underlying has been doing. And for the last year, it's been basically in a nice uptrend, and you can see it's plateauing here, so that's why vol hasn't moved very much, but there hasn't been any heightened expectation. Key stock events, you can see the information that we're putting out there on the proprietary notes that we put from our stock charts, and also just realize that there is a ex-dividend date on the 13th. And you can always look at your broker or give them a call, and they can give you that information. And also news and commentary. Finally, what we want to also discuss is, and we said it was important to understand if volatility starts to move, That's just a heightened expectation of potential movement and potential deviation from the current trend. That's why we pointed out we're going to do more webinars. Also, one last thing. We did an estimated move calculation that through January expiration, so for the next 3 weeks, and we're seeing the market is actually pricing in the potential for this underlying between now and January expiration over the next 3 weeks to potentially move about $3.60, and it's not directionally biased. That means it could go up or down that amount, and that will change as the environment changes here in the market. And we're going to have many more webinars, folks, on that. You can always check on the Need Help and view any of the training videos or take a look at our education page, and we're going to have that information for you. And you can also follow up and see all of our past picks, and this is our latest pick today, TRN. So, folks, we want to thank you for coming in and listening to today's discussion on today's Tradespoon pick of the day, and we look forward to a great 2014. Take care, everyone, and have a great trading day.